let's kick off. So appreciate everyone joining today and taking the time out of your day to join us to talk about MTD myths versus the reality. Today's session is all about debunking common making tax digital myths. We're going to cut through the noise, clear up some common myths, and give you some practical views of what landlords are actually doing or what they need to know. No scare tactics, no jargon, just real world guidance. So you can, leave feeling a little bit more clear and confident about about how you're going to approach MTD. Just do some quick intros before we get started. So I'm Logan, co-founder and managing director of Landlord Studio. We're based in London. We've been working with landlords since 2014, helping simplify rental accounting and compliance. And I'm joined today by Kimberly, who runs Shapcott Accountants and is also, is it president of the ICAEW? Is that right?
I was of the local society. That's moved forward now, but involved in the ICAEW side of things with my profession to help make sure we can support clients as well as possible.
There you go. So we've got both the tech side and the accountant perspective today.
As well as I am a landlord myself, so I'm dealing with the whole stress of all the properties and that fun as well. So no, definitely got a lot of practical knowledge there on the landlording side of things.
Well, it's great to have you with us today, Kimberly. And I guess between us, we're seeing a lot of landlords navigating this right now, and would love to sort of hear your experience with this and sort of see what we're seeing on the ground. But before we jump into it, just a reminder, 40 days is coming in hot. I think it's 39 days actually now.
No pressure.
I made these slides yesterday. So, and so whether it feels far away or not, MTD is coming, and, April 2026 is that first big milestone. And I guess honestly, it's crept up pretty quickly for us. But really, the earlier you understand what's involved, the easier it's going to be to avoid last minute stress later on. But for now, we're going to get into it, and it's really simple what we're going to be doing today. We're just going to walk through some of the most common MTD myths that we're hearing from landlords and other news sites and things online. There's a lot of information out there, and we're hearing a lot of things that you shouldn't do, can do, can't do. We're going to debunk those today and explain what's actually required and talk about practical ways to prepare. And just so you know, this is recorded, so we'll send it out by email. There's no pressure to take notes or anything, but would love also just to engage with everyone. And if you do have any questions, drop those into the chat as we go through. We'll do a Q&A session at the end as well, and just try leave with as many of those questions answered as possible. But for now, I'm going to jump straight into the first myth that I have come across for you, Kimberly. MTD means I just have to submit quarterly tax returns with no more tax return. That's it. I just do the quarterlies.
So it is changing. So what the change we're going to be seeing is that rather than the self-assessment as they're termed at the minute, the income tax return, what we're going to be changing to is quarterly submissions. So it's always going to be calendar quarterly or tax year calendar quarterly. So those submissions will always be on 7th of October, 7th of January, and 7th of May, that they will need to be submitted going forward. And then what will happen after that will be a final declaration or end of period submission, which is in effect a replacement for what we currently do. So what we need to do with the quarterly submissions is extra, but in essence, it's building up a picture over those 4 quarters of the self-assessment income and the property income, which is what your software obviously is supporting on that side of things.
And that end of declaration or final declaration and end of period statement, are they the same, or
Yes,
are
they're
they
the
just
same thing.
yeah
I don't think we've quite got a final name that everyone's using for that
yeah
yet. I know I've seen final declaration in places. I know I've also seen end of period submission. I think I've even seen tax returns somewhere, but I think we're all trying to err away from using the term tax return, because those who aren't within Making Tax Digital or MTD, they will still need to do the self-assessment tax return as they've always done it. So we end up with two streams of people either doing a self-assessment tax return or the Making Tax Digital declarations, if we can kind of separate the two different routes. So we've kind of got one or the other. You're either on one train line or the other, but we're both going in the same direction, just with Making Tax Digital in some ways having a few extra stops on the way to the station.
Yeah. And so just to summarize that for everyone, you still have to do the end of year tax return, but it's in the form of a final declaration. So the myth is that you only have to do quarterly tax returns. That is not the case. You have to do those plus the end of year period statement
Exactly.
or final declaration. MTD applies to all landlords from April 2026. True or false?
No, false. Well, it's false that everyone needs to do it. What it is anyone with gross income. So we're talking gross rent income, not the amount you receive in your bank account, but the actual rental amount added together for all your properties. And that's every property that is in your name, joint names, potentially rent a room, relief properties, so rooms you're renting in your own house. You need to include all of that together. And if you are over 50,000, then you are in from the 6th of April 2026. The other thing to consider is if you are also self-employed. So if you are rental property, you might only have one or two properties. So you go, I'm under the limit, but then you've got self-employment, which actually says I've got 40,000 income sales in my self-employment and 20 income from my property. You're in because your gross, your total out of your self-employed and your rental are both over the 50,000. So it's just something really to be aware of, but it is over 50,000. So if they're not over, you're not in yet. And it's a yet, not a ever, because next year, and probably in the next 6-12 months, we'll be talking about those that are coming in over the 30,000 limit. And then following on from that in April 2028, anyone over 20,000 will be in. So we'll again be talking probably in the next 18 months, 2 years, to remind people that if they're over those limits, that they will be in. Anyone under that at the minute will just stay on the self-assessment system. They don't need to worry about Making Tax Digital. It doesn't matter that at the minute you don't have to. You may have to if you're over 10,000 at some point, but we don't have any dates for that. So it's 50,000 for now. And keep your eyes out if you've got less than 50,000, because you will be coming in potentially at a later point.
I saw a question actually that is kind of related to this, but what about limited owned companies or properties?
Limited companies are completely outside the scope of Making Tax Digital. So if all your properties are owned in a company, you don't need to do anything. If you have some in a company and some in your own name, the ones in your own name you need to look at. The ones in the limited company you completely ignore for Making Tax Digital purposes.
And one other question, what about interest received from director's loan to a company? Is that classified as income?
So if that's interest you've received from your company on a director's loan that you've got, so you've lent the company 100 grand, you get 10%, so 10 grand a year, then that will need to be reported on your personal tax return. If you've got property in your own name, you'll do the quarterly submissions on the final declaration, that end of period submission. That's where you would put that interest income onto the kind of the final declaration. So yes, you would report it, but you don't report that bit until the final declaration.
Mm-hmm. So true or false, MTD applies to all landlords from April 2026 is false. And there's obviously a number of different things that you need to consider around there, whether you're a sole trader, a landlord, both. If you're a limited company or a private landlord. We've actually got a lot of information on our website about this, which I'll send out after as well. But on to myth number 3, I can't use spreadsheets anymore for MTD.
So this is one where I've kind of had a few can you, can't you. So the strict answer is yes, you can. However, the issue with using a spreadsheet is you have to find some bridging software to connect that spreadsheet to use whatever API to get it to HMRC. So is a spreadsheet useless? No. However, it depends then how you're doing it. If you're using an accountant, they may say, okay, that's great, send the spreadsheet each quarter. They've got bridging software. If you're doing it in your own name, using a spreadsheet may not be the best option. You may want to find a software that will do that for you rather than having to potentially learn a bridging software to take it from your spreadsheet to a bridging software to submit it, because I suspect the bridging software cost is probably going to be the same cost as the software cost, which will actually give you a lot more information on your portfolio than your spreadsheet is potentially doing for you at the moment. So yes, you can still use a spreadsheet. However, there is a little more to it than just yes, you can use a spreadsheet.
Yeah, and there's a lot of workflow issues that come with spreadsheets as well, like exporting, importing, etc., and keeping that compliant under the rules as well is quite a tricky situation sometimes. So
yes, definitely. The digital links can be kind of the issue to make sure everything is crossing across. If people are looking at doing it themselves, I'm more inclined to suggest that they use probably some sort of software, because the cost of the bridging software compared to the software that will already be a click of a button, I think there won't be much difference. So you're probably better off investing in the software to do it, because it will probably be a lot easier for you than the bridging side of things. If you're working with an accountant, you probably will be able to do spreadsheets because they'll be able to do something with you to make it work. If you're wanting to do it yourself, I think software, in my eyes, would be a better option for most people.
It actually flows very nicely into the next myth, which, depending on who you ask, may give a different answer. But will MTD will increase my tax bill?
Theoretically, no, it will not increase your tax bill, because all we're doing is reporting exactly the same information. We're just reporting it quarterly on a cumulative basis. So each quarter, the numbers will increase in line with the proportion through the year. And then the tax is calculated based on the full year's income and expenses, and as it would have been done now. So theoretically, the tax is not going to change. The payment side of things, they've currently said they're not making any changes. So if you're already paying 6 monthly, that won't change. If you're only paying annually, that shouldn't change. However, I have heard commentary that they're not doing anything quarterly or monthly yet. However, they may be looking at some point we'll end up paying quarterly based on what they're seeing, but there's no confirmation. That's more gossip at the moment that we're probably all expecting to happen at some point. But at the minute, they've said we're definitely not doing that. But if that does come in the next 2-3 years, I don't think it would shock or surprise any of us at this point in time.
Awesome. People using spreadsheets to, sort of going back to the previous myth, using spreadsheets to do their accounting, etc., for MTD, it's likely to add more work for the accountant, and then potentially the accountant might bill out for that.
It would help reduce the tax bill because those costs are allowable, so it'll help reduce it. It's just the accountant will get paid more than the tax. So may not change things too much, but hopefully the tax won't. It's just the cost of the compliance side of things is definitely heading upwards, not downwards.
Yeah, so reality, I guess, changes how you report income and expenses, but not how much tax you owe MTD is just requiring digital record keeping and quarterly updates. Here's a good one. My accountant's going to handle all the MTD compliance for me.
So the answer to that is they can do. However, you've got to be willing to pay the price for doing that, I think is where I go. We're in our conversations with our clients at the minute to look at who's doing what, how are we fitting together with clients to make this work from a practical point of view. So I know from our point of view, we're looking at some who said, I'm going to deal with all the quarterly compliance bits. I don't need you involved in that. Can you just help with that final declaration? On the opposite end of the spectrum, I've got some clients who go, I don't know, I just give you a sheet of paper at the end of the year or some paperwork and you do it all. Can you do it? So they'll be looking at giving us the rental statements or whatever paperwork, the bank account, so that we can, in essence, do the digital quarterly submissions, then continue onwards and do the final declaration. And we've got some in the middle where they go, I'm going to do it all, but I want you to check it because I'm not confident to click the button just in case I cock up. So you've kind of got this whole spectrum. So yes, your accountant will be able to support with all of this, or should be able to. The question, I think, is going to be how much support you think you need and how much you're happy to be spending on some of this compliance activity, because unfortunately, I don't think there's any other way to say it, but there is additional cost. One of the key things that the softwares do is they're all doing the quarterly submissions. However, if you're doing your self-assessment on HMRC systems at the moment, under Making Tax Digital, you will not be able to do that anymore. So you will need some sort of software or to use an accountant who can then do that final declaration for you, because that is not going to be something where you go, I just log into HMRC and send in my tax return. You will not be able to do that anymore. So there is this element of, you can do your quarterly submissions. I know there's been a lot of talk on that side of things. The final declaration, I've not seen what's happening for those that are doing it themselves yet. I think we've all been focusing on the quarterly stuff. The final declaration, we'll start seeing that later in the year as everyone gets on top of the first part of the Making Tax Digital puzzle that we're all kind of dealing with at the moment.
Yeah, and I guess just to sort of summarize that for everyone, accountants are still involved. They're very much involved. And if you're not using one, we would strongly recommend you use one for all kinds of reasons, whether it's from the tax perspective, helping you set up the systems in place, etc. And it's just a part of doing business as a property owner. Just sort of going back to the one of the previous myths around quarterlies and the end of year. So this one's about replacing self-assessment entirely. So we've heard MTD replaces the traditional self-assessment tax return. Is that correct, or?
Yeah, so in effect, what we've got to think about is, at the minute, they've got all the data on one server. And a lot of this Making Tax Digital is moving things to another server. So basically, HMRC is moving house. And we kind of think, oh, this is all massive. But in effect, if you think of moving house, the whole Making Tax Digital thing is kind of like just they're moving the sofa across to the new house. But they've moved the rest of the furniture already into the new house. So the bit we're actually seeing as a general public is actually only the sofa being moved. We've not really appreciated the fact that they've built the rest of the house, the kitchen's all sorted, the bedroom's all sorted, everything's all sorted. That's all the techie stuff that they've been doing in the background. So in effect, the self-assessment system that is there, everyone will eventually move to this new server, the new house. It's just Making Tax Digital is forcing all those that fit the criteria to move across now. So it is a very different way of working, but hopefully from our point of view of the people who are actually doing it, hopefully we won't see too much upheaval with it. And they have been testing this for, I think, the last 2 years now. So things are a lot of the teething issues have come to light already. And hopefully as we get everyone in who needs to come in April, hopefully there won't be too many teething issues as we support and get people into this new approach to things.
I like the analogy of moving house with the couch.
I heard it from one of the tax lecturers, and it just resonated. And I was like, I can understand that
Yeah.
and the reason why. And I think it's good for all of us to understand the whats and the whys, because we just think, oh, this is loads of hassle. But actually, I think some of the databases they're using go back decades, which is why we have so many issues with some of the tax systems we've got in place in this country. So hopefully, fingers crossed, it might work smoother, but I'm not holding my breath at the moment.
A couple more myths before I jump into Q&A. I know there's a few questions coming through. I need to get everything perfect by April 2026 or face the penalties, referring to penalties in the first year, fines, etc. I know they've done a soft landing approach now, so
they have done a soft landing. So anyone who is coming in 26, 27, I'm not expecting any penalties. However, if you're not doing anything, there is still that possibility of penalties, because doing nothing is not really an option at this point. However, if you're trying to do stuff and you're doing it, there shouldn't be any penalties whatsoever with the soft landing approach. In terms of timings, theoretically, if you've not got everything set up by the 6th of April, it's not the end of the world. I'd ideally try and get things set up, because at least then you know you're doing things that you're meant to. But theoretically, the first point that you have to do a filing is the 7th of August. So on that basis, your absolute deadline is the 7th of August, that you need to have got your software system set up, done what you need to do, so you are in a position that, I say on the 7th, from the 6th of July through to the 7th of August, you can file your first quarterly submission. So you've kind of got that 1 month window to do it. So don't leave it till the 7th of August is probably best practice. Ideally, have it ready so that you can be going that first week of July. On the 6th of July, you're pretty much ready to go, or you've got a couple of days and you're good to go. So if you don't, it's not the end of the world. But I'd just say try and aim to get it done as soon as possible, because then at least you know you're in control of things, rather than stressing as the deadline is approaching in August.
Awesome. And the last myth I just want to touch on is, if my rental income is just below the threshold, I don't need to worry at all.
Which I would probably go, you don't need to worry at the moment. However, you do need to watch what you do, because I know my husband and I have just done a rent increase on one of our properties. And if you go and do a rent increase, you may be just under now, but if you increase the rent, you may be just over. And originally, when they were talking about all these things, they'd said the limit is going to be 10,000. And then when I started looking at my property, it's like, oh, I'm just under at the moment. But as soon as I do my rent increase, I'm going to be just over. So it's very much going to be, you might be under for now. However, don't think that devoids you of any responsibility ever. It may be in the next 2 years you increase your rents and all of a sudden you're over 20,000. So you're not in 26, you're not in 27, but you'd be in 28. Or you might not be in 28 because you're not over 20,000 at that point. But by 2029 or 2030, you're now over 20. So now you would be in. So there is certain timings of when that takes you in. And I'm not going to say that's a simple process of figuring out when you go in. We're still trying to work that out as accountants ourselves of when you get in. But don't ignore it, because potentially you may end up trickling in by rent increases and things like that, that you don't want to not do a rent increase, because it means you're going to be having to do Making Tax Digital, because you're kind of punishing yourself by doing that. So it may be you get in and then you increase again and you increase again. So it may be when you go over, there's a slight additional cost, but as you continue increasing it, there's no additional cost to it.
Awesome. That's all the MTD myths I wanted to sort of go through today. I know there's a whole bunch of questions around that, the nuance of all those. So I'm just going to open up the floor just to bring some of those questions up on the screen now. There was one around pensions. So is pension a part of MTD at all, pension income?
So this is where, when you do your final declaration or the end of period submission, that's where you would bring in that income. So you'll do your quarterly submissions for the rentals. When you do your final submission, like you do on your self-assessment now, you'll put in all your pension income and the tax you've already paid. You'll put in the PAYE. And the one positive of the new system is HMRC, theoretically, if they've got that information, they will pre-populate that for you, which means when you come to do that final declaration, theoretically, the only thing that you'll need to add in is things like interest, dividend income. It's basically the things that they don't know about. So theoretically, if you're getting state pension, if you're getting private pensions, if you've got a salary somewhere, all of that income should be already within the final declaration, that end of period submission. And it's just a matter of looking it over and going, yes, that's right. Yes, that's right. Yes, it's brought everything in that you were expecting it to be. And then it's the other stuff that they won't know about you need to bring in. So it will get taken into consideration when doing the tax calculations.
Another question I saw was around service charges. So I believe this is a categorized expense. Have any sort of insight on what service charges might look like in terms of categories for landlords tracking expenses?
I believe there's normally a service charges. In most of the software, there is a service charges. And then I think it's letting fees, service charges, that sort of area that you'd incorporate, because there's normally ground rents as well as service charges. So on whatever your software you're using, there should be a category that you should be able to see on the list. And then that will then match it off to whatever the HMRC's categorization is, because ultimately what we'll eventually all be doing is getting whatever all of our expenses are into the HMRC categories that go on to the Making Tax Digital submission.
Yeah, exactly. This one's a good one. So I think this is related to adjustments that happen through the year. So let's say, if I'm reading this right, if an expense is added, can you adjust that after the quarterly has been submitted?
So the simple answer to that is no, you can't adjust what has already been submitted as far as I'm aware. However, how it works is it's cumulative. So each quarter you're building up the data that you've already got. So if you find you've got a mistake, you'll in essence take it out. And when you do the next cumulative submission in the next quarter, theoretically, you'll have removed it, added in any correct expenses. So the current figure that you send in the next declaration, next submission, will be the correct figures for the cumulative figures built up. So no, you can't change a previous one. The main one there is if you kind of do your last submission and you find, oh, I've made a mistake, what you'll do in the final declaration is you'll make any final adjustments, because they're expecting certain adjustments at year end, because maybe you only pay, I don't know, certain costs you only pay once a year, and those adjustments can be put on that final declaration. So it doesn't mean anything's final until it's absolutely final. But ideally, it's why we're kind of advising clients to try and get it right each quarter to make sure that you're not finding you're doing things. But if mistakes happen, it's not the end of the world. Adjustments can be made in the next quarter's submission. And then you just need to make sure that final declaration, you're 100% happy with it before it's submitted.
Yeah, that makes sense. We'll take a couple more, but here's another one. Jointly owned properties, spouse, circa. Does this mean we're included from over 30K? Are we treated individually?
You are treated individually. So if you are 35K, you're probably under the 20,000. So you probably don't need to do anything, because at 35, that's what, 17 and a half each. So you're under the limit. So you won't actually need to do anything Making Tax Digital unless you want to go in voluntarily. So yes, you may have escaped it. However, this is where you're at 35 now. As rents increase, when you go over 40, if you go over 40 in the next couple of years, at the point you go over 40, you'll both have 20,000 each. So you'll both have to go into Making Tax Digital at that point. So that's probably a really good example of where you're not in at the moment, but you just need to keep an eye on it. And if you do make any changes to shift properties into one person's name or change the 50-50 to a different proportion, it may be, and I know we've got a few clients where one partner is in and the other person isn't in. So it might be 75-25 split. So one is over the threshold, one is under the threshold. The one over needs to submit through Making Tax Digital. The one under does a normal self-assessment as they're currently doing. So there are a few nuances there to just be aware of depending on your situation.
Yeah, this is when it becomes useful to engage with an accountant who can sort of look at all these nuances.
Tell you the exact position you're in, definitely.
Yeah, exactly. One more. If I use Landlord Studio, will I need to purchase additional bridging software? No. So we're obviously fully integrated. Plus, we're the accounting software as well. So you record all your income and expenses in the product and then submit it directly from Landlord Studio. No additional software from there. We'll take one more question.
One I've noticed is, when is the final declaration due? Which I kind of thought we've not mentioned that. That's probably something worth mentioning. So the final declaration that you need to do is going to be submitted 9 months after the year end. So after the tax year, we've still got that 31st of January deadline for that final submission. Theoretically, hopefully, I know a few clients where the main problematic area of doing for their tax submission is their rental income. Because you've done it quarterly, actually, you may be able to do it earlier, because if that's the bit that normally slows you down, hopefully you can do it during the summer. But you do have until the 31st of January, and that's still the date that the tax is due as well. So in terms of that side of things, there isn't any changes from that point of view.
And we'll actually send out a resource, which I'll show you now on the screen. So we've got an MTD hub which covers a lot of this information, final declaration dates, MTD dates, all the sort of useful compliance guides, etc., which you can check out. Just go to landlordstudio.com, UK MTD hub, or just jump up into the main menu. You'll see it up there. And this is basically a really good way to just read through it in a structured, plain English sort of way. Great place to start and check that out. Another place you can jump into also is our community. So we've got over 3,000 members in there now. Join that. It's on Facebook. Really great place to ask questions, share experiences. Lots of landlords in there talk about MTD as well. So definitely join that. And post your questions in there too. And then sort of finally, if you want to jump into Landlord Studio and try us out, we've got a free 14-day free trial. And then our pro plans start at £12 a month. And again, we will support the whole MTD filing from within Landlord Studio. We also have accountants access as well. So if you've got an accountant working with you, they can access the product through their own dashboard, and that will help them a lot with just workflow, etc. So yeah, that's a little bit about our product and where you can find some more resources. I'm going to close up today's webinar. I know there's a bunch more questions, but we will reach out to all of you with these frequently asked questions and get some answers back to you as well. But again, really appreciate you joining in today. And thank you, Kimberly, for taking the time to help us out with these MTD myths. Hopefully it's been insightful for you with these questions coming through as well.
It's great to see new questions because there's so many from so many different people. So no, it's been great to see what people want to know, and hopefully we can continue to help get the message out there so people feel confident in doing everything MTD.
Awesome. Well, again, thanks everyone for joining in. Appreciate you, Kimberly, and we'll get the replay out so you can rewatch this next Tuesday. But hope you have a good rest of the day, and we'll talk to you soon.